Hi guys, and welcome back to the channel. In this video I'll be giving you 3 stocks that will 2 or 3x in the coming years. And if you stick till the end of this video, you might get a 4th bonus stock that I'll be showing you. So let's just get right into it with the first stock. The first stock is Corsair Gaming. I've talked about this stock before, and it's simply because it's so great. I'll link a video up here in the corner where I give my full analysis and thoughts on this company. But right now I'll just show you the most important things you have to know before investing into this stock. So first of all, it has a great PE ratio. So considering that Corsair Gaming is in the gaming industry, which is going to grow in the future. It's not an industry, it's a sector that of course will get bigger and get more demand for gaming, streaming equipment in the future. Lights, microphones, computers, they got all sorts of stuff, right? And that will be in high demand in the future. So normally when something is going to grow in the future, we often are okay with a higher PE ratio. But the PE ratio on this stock is actually great. You can see it is only 19.7x and the industry average is 23 and is well above that. And the price to growth ratio is also great. Normally if this is above 1, then it could be overvalued, the stock, but it's below 1, so it's undervalued. And we can also see that right here when we put all these things together, we conclude that the fair price is $84. So right now it's 61% undervalued, and yeah, that's basically everything you have to know about the valuation of this company. Also, I don't want to take a look at the balance sheet right now, but it is great, and you can see it in the video up here in the corner. You know, they are just growing like crazy. Their earnings, their revenue, their gross profit, their gross margin, everything is just so great. And of course, it's very good this year because of the coronavirus. Everybody has been buying streaming gaming equipment, but yeah, it will definitely continue, maybe not as much as the last year here. Yeah, so that was Corsair Gaming. I really hope that you will check this stock out if you have not heard of it already or invested in it already, because this stock will definitely go to $100 or $80 in the coming year or something like that. But remember, it's not financial advice. Yeah, make your own research. This is just like a small bite-sized introduction to the stock. So the next stock is Facebook, and we all know what Facebook is all about. They make most of their money selling ads on their social media, and Facebook actually also owns Instagram and WhatsApp and Facebook. So they own these 3 social medias, which is pretty much half of the world's population use one of those every single day. So yeah, everyone is using these services, and that is why it's such a huge company. So if we take a look at the price to earnings ratio right here, you can see that it is almost 30. So it's a little bit higher than the other one, but it is actually still undervalued compared to its own industry. So yeah, it's the media and services industry. Although the price to earnings growth ratio is actually almost at 2 right here, that could suggest that maybe the company is overvalued. But when we put all these factors together, we still think that the company is 21% undervalued and its fair value is $450. A lot of people say a lot of bad things about Facebook because they of course have a lot of data on hand, and that of course concerns a lot of people. But at the end of the day, I don't think you should be that worried about Facebook really suffering from getting sued and stuff like that, from privacy reasons and stuff like that. The only thing is that now they will have a little bit of a harder time targeting with their ads. The reason that they want all this information about people is because then they can target their ads and kind of get a better overview and get more conversions, sell more of their yeah, basically make it more profitable to buy ads with them, because they know their audience so well that they can just place the ad in just the right location. And that is the reason that they need all of this information. And in the next update of iOS, you can actually turn off on an app, in an individual app like Facebook, you can turn off, I don't want this app collecting data about me. So that is going to give them a little bit of a harder time, but Mark Zuckerberg, the CEO of Facebook, came out and said that it's not going to be that big of a deal anyway. So yeah, there's a lot of things going on with this company. They are also making some devices, some virtual reality headsets. Yeah, they're expanding in different directions, also away from the social media. So that is great that they're kind of diversifying. So Facebook is definitely a company that I'll be looking into buying here in the next couple of months. Right now I only own Corsair. I also would like to own some of the next stock that we get to right here, which is Amazon. So Amazon, we all know Amazon, but actually there's a lot more to it than just that. They are in retail sale of consumer products and subscription. They have a streaming service. They have a cloud computing service where you can like Dropbox, where you can store your files in the cloud. They have, yeah, basically everything. It's hard to say all the things that Amazon does, but yeah, mostly retail sale of consumer products. That is what they're kind of mostly doing. You probably know that already. But the reason that this company is so great as a stock is because of the valuation again. You know, it's not that great of a valuation like we saw before with, for example, Corsair Gaming and Facebook. It's a little bit more to the expensive side, but it's still great value, I think. So the PE ratio is 64, and that is well above the industry average, which is 34. So yeah, that's a very high PE ratio right there. So when you calculate all of these ratios together and kind of put it into one number, this company is almost 33% undervalued. Its fair value is $5,117. The bonus stock, which is kind of similar to Alibaba, and it's actually it's a little better valued than this company. Yeah, that is Alibaba. Alibaba stock, you've probably heard of it. They have all sorts of things. They have just like Amazon, they have retail to sell consumers products, and yeah, you can source materials from suppliers in China. They have, yeah, like Amazon, everything like Amazon. They have the cloud computing as well. They have entertainment as well, and they have recently they have started making cars as well. So yeah, they have a lot of niches that they're in. And if we take a look at the PE ratio here, you can see that it's 25, so it's much lower than what you get in Amazon. And yeah, so it's a great PE ratio that this company has, which could mean that it's actually undervalued. The price to earnings growth ratio is still a bit high, but still, when you put all these things together, you still end up being 31.9% undervalued. So that means that its fair value is $325. Quick thing I just want to mention about Alibaba is that there's a lot of fuss going around about the Chinese government taking a lot of control. You've probably heard about China being kind of strict about a lot of things, and recently this company, a part of this company, wanted to go public, and then yeah, it got closed down by the government because of some weird reason. So, you know, there's just kind of a lot of things that has made investors worried about investing in the company. But still, recently, two giant investors invested into this company. It's Charlie Munger, Warren Buffett's business partner. He invested like 20% of his portfolio into this company. And also another guy who leads some kind of hedge fund, he invested like, what was it, 10 or 9% of his portfolio into this company as well. And these two investors, of course, know a lot about the company and see a lot of value in the company. And that is, of course, why they made the investments. But I think if you took all of these 4 stocks, put them in a portfolio, you'd be pretty good to go. Although 4 stocks in a portfolio is not that much, and you want a little bit more diversification usually. So yeah, you would have different sectors. You would have the kind of retail. Amazon is in a lot of different niches, as well as Alibaba and Facebook in the social media space. So yeah, these stocks are definitely some high growers in the future, and I think it's definitely possible to 2 or 3x some of these stocks. So with that said, that was pretty much it for this video. Please like and subscribe to the channel, and with that said, have a great rest of your day. Peace.